The financial markets are in shock following the failure of Crane Bank Limited to operate above the required financial asset threshold. In what is already being described as the last days of Crane Bank, what could have led to such a fate of an institution that has won over 10 excellence awards in the past decade?
And we have been talking about these issues. Banks in Uganda have failed to understand the fact that information economics works in banking. When you are setting your interest rates and also taking the decision to lend, you need to look at some few facts about the information economics. We know that when banks charge high lending rates for a relatively long time period, borrowers tend to, those who are safe borrowers, who are willing to pay back, we call them creditworthy, they tend to stay away.
The Ugandan economy is currently bearish, proven by the huge amounts of non-performing loans, low income expenditure, and stunted growth. But who is to blame for such a grim outlook, which now threatens the very existence of commercial banks?
There are a few big banks that are owning a very big, market share and also deposits and assets that keep these rates high. For them, they don't mind, whether other small banks are trying to reduce them or so on. They will make it very, very difficult for the other smaller ones to compete with them. Why? Because government has failed to bring in a competition law.
So, what is the way forward for commercial banks in view of preventing collapse?
The challenge. Banks need to look into two things. The principal agent problem, how do they reduce on this information problem between them and the people who give them the money. This can only be done by giving us either attractive interests, those who put money in the banks, or reducing the lending rate such that it is justifiable for them to pay us very low money, on our deposits. So many Ugandans are no longer saving in banks, and this has made banks now to rely mainly on borrowing money which they borrow at very high rates, and yet they would have attracted deposits from people, and they use those deposits to lend at lower rates.
The onus is now on the regulator, Bank of Uganda, legislators, government to introduce a competition law, as well as the academia to guide in policy making. Joseph Stiglitz, a world-renowned information economist, warned Ugandan banks to desist from behaving like American banks prior to the financial crisis.